I thank you guys for being here. I am a mortgage broker, a real estate investor, and a playwright, and I'm excited to be delivering this great information to you guys. This is our 4th day of content. Tomorrow we'll wrap it up for the week. So without further ado, let's go ahead and get started for this Wednesday. Today we're going to discuss loan programs and the credit scores needed for the specific type loan programs. First of all, let me put a disclaimer out there, guys. Not every lender is created equal, okay? Every lender is not created equal. You may go to one lender who says you need a 640 credit score for USDA, and another lender may say, hey, we can do it with a 620. Veteran loans, you may go to a lender who says you need a 660 credit score. And another lender may say, hey, we'll go down to 500 credit score. Real story, one of my team partners actually, sorry guys, I'm sweating. I think I'm getting a cold. One of my team partners actually was able to do a refinance for a veteran for a VA loan with a 489 credit score. So let's just go ahead and throw that out there. All lenders are not created equal. I'm a mortgage broker and I have access to several different lenders. So let's talk loan programs and credit scores. And real quick, if you haven't seen the other 4 days of content, you can watch that content for free on my YouTube channel, Sue Ham, or you can subscribe to our free Facebook group, buying and refinancing homes in South Carolina. You do not have to be from South Carolina to get in that group. We can close loans in 48 states. All right, so let's talk about the first loan program, which is conventional loans. Conventional loans are not backed by the government. They are used for primary homes, second homes, or investment properties. Typically, the credit score needed for a conventional loan is 620 or higher. And typically, your down payment consists of 3% to 20%. Okay, I know a lot of people think, oh my God, I gotta have 20% to put down on a home. That is not the case for these programs. It ranges from 3 to 20%. Now, the next loan I want to talk about is the FHA loan. No, it's not for first-time home buyers. That's what many people think. You can't get an FHA loan unless you're a first-time home buyer. And let's go ahead and kill another myth, another rumor, another lie. First-time home buyer does not mean you've never ever bought a house before in your life. First-time home buyer could be someone who has never ever bought a home before in their life, or someone who hasn't bought a home in the last 3 years as a primary residence. At that time, you are considered a first-time home buyer. I gotta turn on my fan, guys. Ooh, I took some Theraflu last night and that thing got me sweating. All right, now FHA loans are backed by the government. They were established to help people to get into homes faster, okay? To help people who may have a little bit of credit blemishes, who may not have as much income to put down on a home. So FHA stands for Federal Housing Administration. They do these programs. They back it by the government. Lots of people have FHA loans. Matter of fact, I had an FHA loan on a duplex that I bought, okay? FHA loans, the credit guidelines are less stringent. Down payment is a lot less. Typically, when you're doing an FHA loan, you only have to put down 3.5% of the purchase price of the home. Unless your credit score is like a 500 or below a 580, 500 to 579, then you typically have to put down 10%. And the reason for that is the credit score is low. So there's more risk that the lender is taking. So they need you to have more skin in the game, i.e. put down a little bit more for down payment. If you have a 580 or above, you're putting down 3.5% of the purchase price. All right. So that's the FHA loan. You do have to pay mortgage insurance. Mortgage insurance doesn't protect you. It protects the lender because just in case you default or something of that nature, they have some type of insurance to protect them. Okay. You don't have to pay mortgage insurance for the life of the loan. I'll tag another video under here that explains mortgage insurance and private mortgage insurance. Then there's the USDA loans, no money down loans, right? You put no money down when you're doing a USDA loan. It stands for United States Department of Agriculture, right? This loan applies in some rural areas and some suburban areas. So if you can qualify for a USDA loan, you'll be blessed to be able to get into a loan that does not require a down payment. Most lenders want you to have a 640 for a USDA loan. Not all lenders are the same. We established that from the beginning of the video. So some lenders may take a lower credit score to do the USDA loan. I do want to say this with USDA loans, unlike FHA, the reason why I like FHA loans and VA loans the most is because you can have a higher debt to income ratio. And what that does is that increases your buying power. When it comes to USDA loans, they really don't want you to have a whole lot of debt. And same thing with conventional. So you can't have a whole lot of debt unless you're making a whole lot of money. All right. But just keep in mind, debt to income is pretty low on USDA loans. OK. Now, there are jumbo loans. These are homes exceeding the conforming loan limits. Credit scores typically need to be kind of high because these are jumbo loans. They're talking about $700,000 loans and up. So you typically want a 700 credit score if you're doing these kind of loans. There's also the FHA 203K loans, and these loans are really good. You can actually buy a home that needs repairs and fix it up. So now we'll say this. That this is something that is going to require a little work. You have to have a general contractor who is licensed, and you have to go through this process of submitting the bid of what needs to be done on these homes, take that into account of how much the repairs are going to be and how much the home is going to cost. Boom, it can get done. You can buy a fixer-upper through the FHA 203K program and get that home fixed. It's just a little process, but it can be done. Let's talk about the different rates. There's adjustable rate mortgages, which definitely adjust. And a lot of people right now, their adjustable rate mortgages are taking effect. Your adjustable rate mortgage can go up a point. Like if you had a 6% interest rate when you first started, and in a year it went up to 7%, and the next year it goes up to 8%, and the next year it goes up to 9%. Well, guess what? Every time your rate goes up, your mortgage note is going to adjust. You're going to pay more money. So if you have an adjustable rate mortgage, now is a great time to look at perhaps refinancing just the rate, not taking any money out if you don't want any money, refinancing a rate term refinance to go into a fixed mortgage rate. Now, fixed mortgage rate is just the opposite. Your rate stays the same the entire time. It does not change. Your mortgage stays the same. I know you're going to hear people say, no, my mortgage fluctuates. No, your mortgage does not fluctuate if you have a fixed rate. What fluctuates maybe is the amount of taxes that you pay and the amount of insurance that you pay, because your insurance company could say, hey, we're going to increase the premium or we're going to decrease the premium. And your municipalities may increase taxes at the end of the year, or they may decrease taxes. So if you have your insurance and your taxes on escrow, meaning included with your monthly mortgage payment, you could see your monthly mortgage bill adjust, go up or down, depending on if your insurance and your taxes adjust. But here's what I can assure you, that if you have a fixed rate mortgage, your mortgage payment never changes, okay? All right, so those are the different types, and of course there are investor loans. So if you are an investor and you want to get a loan, there are investor loans as well. Some investor loans don't care about credit score. Some want at least a 600 credit score. So it just varies. I really don't go deep into detail with investor loans on this particular home buying process, because this is more geared towards primary homes, you actually buying a home to live into it. However, if you're an investor and you're watching this video and you want to inquire about commercial loans, please do so. We have so many different products that would definitely love to talk to you about. So on today's episode, we have discussed conventional loans. We've discussed FHA loans, VA loans, USDA loans, jumbo loans, FHA 203K loans. We've talked about the adjustable rate mortgages, and we've talked about fixed rate mortgages, and we have talked about commercial loans. If you're in the group and you're watching this currently on this live, if you have any questions, please type them below. I'm going to go to my computer, because for some reason on my phone, I do not see you guys' questions. So I'm going to go into the group. If you're not in our group, please join us on Facebook. The name of the group is Buying and Refinancing Homes in South Carolina. All right, let me go to the group real quick, see if there are any questions. I would also like to give you a free gift for being here today. Please go to our website, loanswithsuham.com, and get our free home buying video and the free PDF. Just simply go to loanswithsuham.com. and you can get immediate access to that right now. Hey, Beulah, welcome to the live. I appreciate you being here. Thank you, thank you, thank you, thank you, thank you. So if there are no questions, I would love to ask you guys to please share this. There are people who really need this content, need this information, and whether you close a loan with me or not, I just want to empower people with the information, and hopefully they'll take action, okay? For the majority of people in the United States of America, wealth is usually generated through real estate. So If you're ready, you still have an opportunity in 2024 to purchase your home or an investment home. You can make that happen. It doesn't have to be challenging as long as you equip yourself with the right knowledge, the right realtor, and the right lender. Pick me, and the right lender, and get things moving. So if you are ready to do that, then do that. Get yourself educated. That's the biggest thing. Get educated, be persistent, and be patient. All right, so find the rest of these videos in our free group, Buying and Refinancing in South Carolina, or on YouTube, Sue Ham. You guys have a great day.